All right, guys, welcome to Crypto Kinfolk Charting School. So I'm going to get into what you guys want to do when you're setting up a chart. Pretty basic stuff. I want to make sure that you guys are able to find easy trend lines. I want you guys to be able to set up support and resistances very easily and just find those basic points on a chart so you can find the most likely areas where somebody is going to be buying and selling. So the first thing you're going to want to do is you're going to want to open up your TradingView, of course. And you want to find the ticker that you are going after. Another little tip when you're doing this is when you find something in here, a ticker that you want to mark it as a favorite. Especially if you're using the mobile app, it is very easy to get back to. You won't, have any issues knowing which chart you're going to want to do. And since we are going to be using finance, that is what you guys want to look for, as I talked about last class. So, but the major one that I want you guys to have, and it's called BLX, which is Brave New Coin liquid index for Bitcoin. It's basically the averages across the whole market, which is the main thing that we are going to be looking at now because it gives us the most historical data on Bitcoin. Now, I do want you guys to be aware that I have seen some huge arbitration going on between this chart and the charts that are on exchanges. So that being said, this is something to chart to get ideas where to put buys and all that stuff, but you definitely also want to have your normal Bitcoin or whichever coin you're using on the exchange that you're using to look that up. So for example, let's say we are charting BTC and we want to find BTC USDT on Binance. So this one's always tough. And I mentioned this last class as well. Do not use BTC ST USDT. It's a different coin. Don't use the perpetual. That's the futures contracts. That's a totally different chart than what you're going to be using if you are actually just trading spot. So the prices will be different on there. And if you end up getting to the point where you are actually trading smaller time frames, those pennies and dollars will start making sense for you to have those points at. I would suggest that until you get really used to seeing where the price action really brings you to on some of these charts, if you're looking to get into a trade, maybe jump it up like a few $100 from where you're at, depending on the coin. Of course, you don't want to do that on like ADA or something. But if Bitcoin, if you have that room, just maybe jump it up like a 0.5%, or if you are trying to sell, put your sell order in a 0.5% of where you think it's going to go to, which I will detail a little bit more. Go over that when you're actually when we're actually setting up your charts here in a moment. Give me just a second to find this. Every single time when I'm not doing it on my phone, it's harder to find. So here we are. This is BTC USDT. I'm going to clear out my whole chart for you guys. All right, so this is BTC USDT on Binance, right? So this is one of my saved charts that I have on here. Another thing to note is when you're looking in here, you can click on crypto specifically. You definitely want to do that. There's a lot of tickers out there that will bring you in the wrong place, kind of get you mixed up, and you just want to make sure you have the right chart that you're looking at. So first and foremost, start at whatever ticker you're using. Make sure that you look the ticker up versus USDT. You can type in BTC USDT or ADA USDT, I believe. Yeah, so you can type in Cardano as well. That may be the easier way to do it. Or Bitcoin Tether-S. So yeah, that's the easier way to do it. Just type in the actual name of it and then it brings it up. But for the time being, this is a very important chart that you guys need to have, BLX. The more data that you have when you guys are charting, the more accurate you guys are going to be at setting these specific things that we're about to go over, the support and the resistances of these things. Now, I spoke with Jake earlier, and we are going to use somewhat of a unilateral basis of what we are going to use for our colors, so everybody can look at the charts that we have and know what we're going to use. So the first thing that you want to do after we do this is make sure you are on the right time frame. I'm going to start from doing the yearly. So this is quite literally Bitcoin from the beginning of time, right? So we've only had 2 red candles here. This will definitely paint a very bullish pic for you if you're looking at something like this. You know, each candle we've went up, and the bull run that's happened, and then the pullback has been very short, and then, you know, first candle, second candle, third candle. So hopefully this candle ends up looking a lot more like that candle at the end of the day here. And we have 222 days. If you notice over here on the side, this is a very important thing too that you guys will get to notice. On the side here, it lets you know when one of these candles are going to close, and that's going to be extremely important in the future as well. Another reason why we are also doing the class today at 7 p.m. because we have a weekly candle close at 8 p.m. Eastern Standard Time. So it all goes based on 0 UTC time. So wherever you're at, you can either do it based off of that, or, you know, do it based off of my time zone as 8 p.m. Eastern Standard Time. And that goes for the daily too. So the weekly closes at Sunday, 8 p.m. The daily closes at 8 p.m. every day. So we will go over that in a moment. But very, you know, simply, the first thing that you guys want to do is come over to your tools on the right hand or the left hand side. And there's a lot of short keys on here. I'm going to find you guys a list of all the short keys. They're very useful, so it's not so tedious when you're playing around with your charts and just trying to get something done quick, especially if you guys start getting to the point where you're really trading. You can just sit there and run through stuff super quickly, put trend lines in and things like that. But the first tool that you want to go and use, it's Alt H. I always use the short key for this one. You come into your toolkit that you have. It's the first button that you get. You can, you know, put them on your favorites, which ones you guys want to use. And I'm sure that you guys can see very easily that there is a lot of indicators on here, or tools to use that you guys can do stuff. A lot of them are more so to be teaching. Like it's for somebody who's charting, showing other people what they mean. Like, hey, this is what I'm doing. This is, you know, gives them a good basis of understanding of what they actually need to be looking at, which, as I said, we are going to be charting and putting these lines on here just to give you guys a basis of everything. I mean, we're going to go back, you know, some major times and, you know, give you guys an idea of where you want to put these strictly. Very importantly, make sure that you put them in at least these spots. There is going to be a lot more lines. You guys will have tons of lines on your chart. If you see somebody with tons of lines on their chart, it's because that's, you know, what you want to watch. You want to watch the price action coming down to there. And we want to color code these as well. So when you're setting your first support and resistances, if you're setting a resistance, you want to obviously go up to the high of the absolute high of every single candle that you can go to. So this is on the yearly. I don't see a lot of people do this, but it's very smart to do it, is just have the yearly set. When you are looking at a candle, I've shown this previously in the class, when you hover over it, it shows you over here where the candle opened, where it closed, or where it opened, it's high, it's low, it's closed. So you can actually change these things after you set them. For instance, it says the high was at 64,840 and 36 cents. So I can quickly come over here, hit Alt H, and for the yearly, let's do yellow. I like bright colors. You guys can use whatever color you want, but let's try and keep them all the same so it will be easy for us to check them for you. And we're all looking at the same thing at the same time. Everybody can start posting these and asking questions about them. Everybody in class can help too if you know what's up, and we'll double check to make sure. But yearly yellow, let's go with that. Now you can edit these things, which I said you want to tighten them up to exactly where they need to go. There's a little settings tool on here that you can click on, which is going to bring it up, and you can go to coordinates, and we just type in 64, 840, 36, and hit OK. And it just disappeared. Did I type the wrong number in? Hold on a second here. There we go. All right, so we have that on there. I would also highly suggest coming to this and bringing opaque down a little bit, just so it's not making you mess up when you're actually setting these things in place. It's a little dull in the background, so it's not bright in your face. You know where it's at. And once we get these stuff or these things set, you guys will actually have them color coded and be able to know exactly where it's at and where it's going and see price action bounce off of it. So most important is to set the tips of the wicks first. I wouldn't say it's the most important, but that's just the way that we're going to do it, is find the wicks and put your horizontal lines, support and resistances. Supports are beneath the price action, resistances are above it. So the more places that you have confluence with setting these is better when doing so, and I'll go over that in a moment too, but let's just get some of these set. And I'd like for you guys to do this as well, and then you guys can send them to me later, and I'll just double check that they're right, because this is pretty much going to set your support and resistances up for a very long time. So on the yearly, you want to set the bottom and the top of the wicks with your yellow. And you can just hit delete to get rid of them, but that is the low. So for this one, you want to find the low. It's the L over here. It's 27,958.07. Five, 8. All right, so that's set. Now, the second most important thing that you want to do is get the bodies. I would say this is the first one, but this is the second step. So this is on the yearly again. And as you can see, when you're doing a candle right next to each other, that means this year closed and this year open at the same spot. So that's confluence on the bigger charts that you're going to see. So it's a very, very important trend line that you guys are going to be setting. So how to find that is, this is a green candle. So you're going to be looking for the open where you're going to be setting your trend line. So you come over here, you start, you look, it's at 28,963.70. $28,963.70. 63.70. Another important thing to note is it is possible, and you will see this very quickly, that your trend lines can get broken through. Very often, they will just wick past the trend line and then come back down, or vice versa, wick past the trend line down and come back up, and the body will end up hovering right on that spot. As you can see in this yearly here, it came down, it hit that point. So another one that you want to put is on this candle, and the high of this one, because it's on the top, is 29,293.60. 29,293.60.
Hey, real quick, I think Nicholas and I have the same issue, but how to get to the yearly outside of the monthly on the app?
So over here on the left-hand side, right next to your symbol search, there's going to be a time zone that you can click on it. So you can click the 12 months.
I'm getting,
Mine doesn't have, mine only goes up to 1 month.
yeah, monthly.
So on the bottom, if you scroll down, there should be an add button on here.
Correct.
And you can just pick the times. Well, mine's already on there. So I'm wondering if you guys don't have them because it's just the, did you guys pay for TradingView?
No, okay, I just did what you said. I went down and clicked add and went over to the left side and made 1, 2 for 12, and then put under months, and then clicked add
Okay,
again.
perfect. Yeah, that's just what I did. Yep, that's exactly what you should do.
I explained that stupidly, but yeah, it's at the bottom. You can add it like you just said.
Yeah, so for
Much
the
better.
recording, just hit your time up here, scroll down to the bottom, type in 12, not 21. And then click on months and then click add. I already had it on here.
Yep.
So we'll probably have a few things like that where I'm and just let me know. And it's a great thing that you guys chime in on this, even on the video, because it's important that everybody not watching sees that so they don't get hung up on something.
I thought it was me. I was doing
appreciate it.
something dumb. Yeah.
Yeah. It's probably usually me, so no worries. Did I just throw this on here for nothing? All right, so let me make sure this is in the right spot. That is 29,293. I don't know if I set that one or not. 29,293. 293.60. So down to the penny. Make sure that's set. So you could do this for all of them. Work on those owns too. Okay, Jake might be getting on. I would say that it's very important that we do them all the way back to 2017. That's our previous high. So on the yearly, let's just get these set for all of them. So the previous high. So again, the green candles, when we're setting the wicks support or resistance, depending on where it's at, you're going to want to do the high. And, I'm just saying in comparison to what you're looking at up here, if it's green, the high is on top, obviously. And if it's red, lows on the bottom. But the big thing that you want to watch is the open and close. The open and close will be different on both of these candles, right? So just imagine the price goes up here. When this candle closes, it starts at the top of this one. and then it goes down. So this is the open of this one, this is the close of this one, and vice versa. This is the close of this one, that's the open of that one. So just make sure that you guys have those correct when you guys are charting this. So let's do all the wicks first. This is, the high is 19,764.51. 19,764.51. So you go to this red candle, you want to do the same thing. And again, I'm just doing all the wicks first, bottom and top. I don't think we need to really go down to these ones and set them on there. If we go down to that price action, I'm going back to stocks, guys. So this high is 17,207.96. So Alt H again, click on it. I mean, when I'm doing these generally, I mean, I just fly through it. I just want to make sure that since you guys are actually setting your charts up, that this is done correctly. So 17,207.96. All right. And then we have another wick right here. So this is, I mean, it's pretty tedious to do this, but once you get used to doing what you're doing here, you will be able to fly right through this. And once you set up your charts, once you log back into them, they should be good to go moving forward. So the high of this one is 13,831.41. 13,831.41. 13,831.41. I guess I should note that when you are looking at these, the date is on the bottom too. So the years that we've done, because it kind of gets a little messy around here when you're pulling everything through, you might need to zoom in, which if you go to the right hand side of the chart and you click on the numbers over here, you just click on it and drag it up and it drags the chart, you know, like that. So you guys can zoom in that way, and then just spreading your mouse will open this up, you know, put your two fingers on it and then spread it apart like you're zooming in on a phone. That works too. So just to note here, so if we would have had the bodies on these ones this year in 2019, this would have been a good spot to watch for the close of this candle. So it went all the way up to here. You could have caught a short position at this point, and I mean, it's a lot of money. So these are important. The higher the time frame, the more important the line is. So if you guys want to make them a little bit brighter or something, I just think that once we color coordinate these, year for Y, magenta maybe for month, white for weekly, and then maybe dark blue for daily or something, just depending on how it looks on your chart. Some of you guys will have white charts. That's what you guys are probably starting with right now. There is a lot of settings that you guys can do. You guys want to make sure you're on a logarithmic chart, but you can also do a regular chart too. Same thing. It'll be the same price points, but it will look different. The way it scales in here. See this is the regular chart. This is the logarithmic chart. And for the most part, we're going to be using logarithmic charts, but we could talk about some things on a regular chart. And if you guys are playing around in here, I would suggest you to check them both out. Just write a note down, make sure that you guys are using the logarithmic chart, because that's what we're going to be looking at. Jake and I both, there's a parabolic movement that we will be going over soon enough. Jake was going to explain the bullish case, and I am more bearish than Jake is right now, I think, but I definitely have a good sentiment based on this. I'm not leaving my trade, so I Jake's probably in a better spot than I am, being that my sentiment just looking at something today made me feel like we might have topped out, as crazy as that sounds. I think honestly that we have a chance of not topping out as well. This is just what Bitcoin was made for. And it just doesn't seem like we're really getting to that point of a parabolic movement. Maybe this candle, but I still don't think so. So back to the support and resistance lines. I just want to zoom in here because I want to make sure that we get the bottoms on these. So this bottom, this is January of 2020, and the bottom of that one is $3,941.21. That was the COVID drop that we had. 3,941.21, 3,941.21. 2009. Oh, it's pretty close. Hopefully we never have to trade off of these lines ever again. So hopefully it's the last time we ever see them. So now I'm putting a horizontal ray line, or horizontal line, not horizontal ray. Horizontal ray just goes to one side, left or right. You can choose that in there, but we want to just use Alt H horizontal line at the time being. So the bottom of January of 2019 is 3,354.29. $3,354.29. And we will stop doing the wicks at this one, which is January of 2018. Again, hopefully we never have to use these yellow lines at all. You can also, if you're having troubles figuring out the support and resistances of them, because your chart definitely gets kind of full, especially when you start doing this on the daily, and you can label these just to assure that you know which ones, because if you're getting down to the daily and you're putting four, you're putting top and bottom of the wicks, top and bottom of the candles on each day, you may want to start labeling them so after each week you delete the previous week, so that way you can get a good idea of where you're at. Because if you're, and realistically, the only thing that you are really going to be paying attention to while you're doing that is if you're trading smaller time frames, right? You get down to a 15-minute chart, you have all these lines going across, and it gets really confusing. This does take a lot of patience. It does take a lot of remembering what you're actually doing, what you did previously. So the more organized your charts are, the better they are. I've gotten to a point right now that I probably should organize my charts a little bit better for you guys. A lot of the stuff that I post, I keep looking back at it and gauging where you guys are at. I'm like, I don't even know why I'm posting this stuff, because it might be confusing for you. So we're going to get to that point where you guys, the longer you guys look at these charts, the better it's going to be for you, period. But we'll get there. I'll show you what I mean once we get down to the daily, because this alone takes a little bit of time. But let's snap this one here. This one is nice. How'd you do that? Okay, so let's put this one on here. That is 12 months. That's the bottom of this one is 31.48.33. Getting so close on these 31. All right, so now we want to put in the bodies. So this is the same when you have two candles next to each other. They are pretty much the same. Sometimes you'll see a little bit difference on them because they start so quickly. So zooming in on this, you can tell that they are a little bit spread apart. This one ends at about 37.27. And this one ends about $2 away. So quick jumps there. And you don't have to, type in the coordinates. The closer you zoom in, this is what I do. I just zoom in, I click on them, I hit my Alt H, and I zoom back out. And you don't have to worry about that stuff. A touch screen is definitely great for zooming in and out. You can just reach forward and just pull it back down. Quickly jump in here and zoom back in. So you're just going to be looking for the bodies on these, and you're going to want to do this on the yearly, the monthly, the weekly, and the daily, and color coordinate them. If my computer starts working here. The other thing is, so to save you guys some time on this, so you don't delete the wrong ones. And you can go, there's a tree on here, which I'll get to in a minute, that you guys can look up and set these things to. So let's say, I set a trend line and I want to make sure it doesn't move. Just go in there, lock them all. So that way, because you're going to be touching all over your chart. I think I just deleted that one on accident. You're going to be touching all over your chart. When you grab on something, it might grab the line and move it, as opposed to what you're actually trying to do and just move the chart over. So super important that you lock them too, especially on the higher time frame, so you never have to set them again. Just go through, hit the lock button on all of them. There's an easier way to do this, which I'll show you guys when we get to the tree part of this. This is super easy to do on your phone, hence why I trade on my computer and chart on my phone. It's a little less accurate. I mean, if you're quickly doing it or not zooming in all the way, patiently coming in and doing what we're doing right now. Yeah, we're done. So obviously we don't want to, on the top of this candle, this is our price action right now, which you can see based on the green that's over here. If the candle that it's in is green, it's going to be green over here as well, which it doesn't close for 222 days. We went all the way up to this point. Looking at this yearly, actually, I'm glad that I looked at it because I didn't look at it earlier. It looks a lot more bullish than the chart that I was looking at earlier. But you know, when you look at the yearly, sure, it could be bullish, but we could all get wrecked in the meantime. So, you know, make sure that we have everything set up on here. And hopefully, I don't know where this line came from. That's probably that first one that disappeared. I probably put one more number in there, but maybe that's just God telling us where the price action is going to go. Fingers crossed. And you can obviously delete things doing this. You know, click on the trash can, just like your favorite X, and just get rid of it. You can also change the thickness of the line that you put on there. Also, you can use lines, dotted lines. I think that dash kind of make it a little bit easier, especially if you decide to use a different color than this. I would say just for this class, don't do it, because it's going to make it a little bit more difficult for us to figure out where you guys are putting your lines, why you guys are putting them there, and what they are for. So we have our yearly support and resistances. Again, if it's below the price action, it's a support, hopefully. If it's above the price action, hopefully it's not a resistance, and we just blow through it and become millionaires in a few weeks. But as you can see, there's a lot of rudimentary things that we're going to have to be setting up on these. But if you do it right the first time, there's a lot of coins that you guys are probably investing in as well. So it's a lot of work to do, to go through and do, but you can set these things up. If you go up here, you can rename this and make sure that when you load your chart, I'll get to this in a second. PLX. So that way you have your ticker and BLX in here, and you can save it, which is Control S. Make sure that it's all saved down there. Couple other little tips and tricks. This is one of my favorite buttons on here. Control Z. You can go back. It basically undoes what you just did. And this has helped me out a lot, because often I will accidentally click on something that will delete, and I don't know what I deleted. So I just go back and then I look at it, see if it needed to be there or not, and then just toss it on there. Another point that I will mention right now, but we'll get into later, is setting alerts on things. There's a button up here for it. It's Alt-A. But if you see right here, this is also an alert indicator that you can set up on here. Once we get along in this class for a while, there are exchanges that you can link to your TradingView, so you don't have such a mess jumping around to different devices, doing all of these things to, you know, try and look at one chart and you have to look at another one. If the price action starts moving enough, especially if you're an inexperienced trader, you're going to want to be looking at one chart and just having your hand on your buy and sell orders over to the right or left, or whatever handed you may be, or however you want to do it. Maybe you do it with your feet, I don't know. But once you get better at it, it will become a lot easier. So now the next step, we jump down to the monthly and start doing these. So obviously there's a lot more months on here, so I'm not going to do all these in the class, but if you understand how to set those other ones, you want to do the same thing on here. The monthly is important, so there's a lot of them to do. You run through all this and you get these things done. I would personally start with the bodies and then do the wicks once you go along. The yearly is a little bit different, as you can see, that these kind of don't really, the monthly doesn't really play on the wicks all that much, as you can see, and it blows past the bodies too, but these are price points where you want to see. Also, it's important, the most important thing that you know is where the monthly opens and closes are for the previous month. So this month is more important than Well, it depends, actually. It's not necessarily more important. Just if the price action is within the previous month. So right here, right, when we broke this point right here, the bottom of the previous month, it gets a little bit sketchy because it's like, okay, well, a month ago, this was a good buy right here. This was the best buy that you could get last month. Well, now it went on sale for a lot cheaper. We have a bigger discount that we can get into. When you have different colored candles, like you have your green going up and then you start going down, these are going to be very important on the way down. So we have yearly candles right here. Right, these are, well, this is on this year, but this will give you a gravitational point of where the price action is, but a better buy is a support down here that we actually have. But this is starting from this year right here. So this was the high of the previous year, which is super important too, because now that I'm doing this, I'm like, you know what? I did not have my support and resistances when I was looking at that chart earlier. So this is a solid point right here where people would start buying, the high of the last year, where the price action could come down to, as well as a price point on a trend line that I will show you guys in a minute. But so you guys get the gist of setting these trend lines up. If you guys have any questions on them at all, still can't get into mobile. Did everybody get that yearly set up?
I get how to do it. I just couldn't get the yearly on the mobile itself.
Let me look at it for you, Andrew, just a second. So I don't usually look at the yearly. I should more, but it's on mine. Once you get it on this TradingView, if you're logging into the same thing, it's going to show up on your other one. And yeah, so the next thing that I want to go over real quick, and we'll just shoot over this really quick, and then I'm going to look at a few other things. I'll stop this video and we can start another one and get into some questions and stuff like that. So,
Hey, real quick, I don't mean to interrupt you.
Go
If you
ahead.
do Alt L, it gives you it gives you that logarithmic. Cause I had a hard time finding that one, just that yearly view that you've been using. That's Alt L.
Mhm. Alt
That
L.
sets it, yeah, that set it into that layout, that chart.
Yeah, I really hope this isn't trying to change right now. I'll be pretty upset. We'll just continue. So yeah, if you hover over a lot of these things, it says, if you look on next to it, the short keys, which again, I will try and find what I can to get you all of the short keys. What are the colors we're supposed to use on these lines? Good question, Kyle. Thank you, actually. So I'm going to use yellow. I'm just trying to find a color that matches with the letter, like yearly yellow, monthly. Let's see here what we have for colors. So for your monthlies, let's do closest to magenta, unless anybody has a different suggestion. We had like a 7-year-old telling us colors today to figure this out for you. So what am I doing here? I would say, let's go with this color, magenta. Looks pretty magenta to me. So you may need to knock the opaque up a little bit so you can actually see it, or potentially just use a straight line. So yeah, we might have to bring that one up all the way so you can actually see it. That's why I use bright colors. And again, if you guys have a white chart, this is probably going to look a lot cleaner to you. I just like using a dark chart because it hurts. You guys will stare at this for a very long time. You will spend a lot of time with this. Wives will get jealous. Dogs will get upset. It happens. Family will disown you. So just be prepared on what you guys are actually doing getting into these trades. So that's how you set that. And then the weekly, we're going to do white on that one. On my charts, it will show up pretty easily. And again, if you look, I'm just going over and changing the time. You guys should all have the weekly, the monthly. 3 days is important. 2 days is important. Each time period you go up, these trend lines matter more. You don't have to set the 2 and the 3 days, but you can. And if you do, then it's going to give you a bigger point of what you should look at. And another thing that you'll notice is when you're setting these lines, you're going to be putting another price point on top of another price point. So, some of these yearlies, some of these monthlies, some of these weeklies, and these dailies will all have confluence together. And if you have that, let's just we'll get into that. I'm going to have you guys do some homework and set this stuff up. And once we do get into it, I'm going to set my chart up, and then we'll make some golden, maybe not gold, maybe we'll just make it like a bright green or something to see where we have confluence between everything. And we can really set these charts up and label them and talk a little bit more about it. I want you guys to be able to use this, get a little idea of where things are at, and the more confluence that you have, the more lines that touch each other or are on the very same exact spot, that makes that line 2x. It is 2x important than a line that doesn't have it. So again, confluence is a big thing that you guys are going to want to be looking for, which it just means that something else is happening in that spot. Basically, multiple things are happening that give you an idea of what could happen in the future around that area. And when you guys start getting confluence on these indicators, these trend lines, these support and resistances, it makes your trades simple. It's really simple. And when you don't do that stuff, you'll make bad decisions, like putting in the biggest long that you ever had in your life. And watch it tank down a big candle like that. So the next thing I want you guys to do is to set up some trend lines, which trend lines, you want to make sure that you have at least 3 touches. 2 touches, it's not a trend line at all. It could potentially be a start of a trend, but it's not a trend line until a 3rd touch happens. So that is extremely important. And if we go back to, this is the high of 2017. You can draw, this is more of a parabolic trend line, but you can still draw a trend line on it, because when it breaks out of it, see that big jump right there? That's money. Trend lines are great. And once we start going through this and I start going over my pattern trading, all they are is trend lines. It's just trend lines that get compressed, or you can see that people are just less willing to sell off at a certain price and buying pressure comes in. Multiple things that we're going to discuss have to do with economics, obviously, but the understanding of like a head and shoulders pattern or a wedge, it starts getting, people are less likely to sell it at a higher price. So it goes down and then people are buying it up for a lower price and it just starts compressing together. And then when it shoots out of that, that just means that everybody's just done screwing with each other and they're going one way, either way, up or down. When you're getting down to the weekly, you don't necessarily need to set up every single week on these at all, or the daily. I would say the monthly you should, but when you get down to the weekly, you want to start finding things that have confluence on them where there's multiple touches on these. So the yearly is important. The, you know, setting all of them because it's easy. You don't want to have a billion lines on here. You just want to have enough that you know where the confluence is at. Confluence. And if you can get multiple touches, like this is a price area right here that I would watch, which I believe that we're going to stay above in 2 minutes. If we can get above this point right here, which we're about to get into, turn that white. It's going to be really important. And again, this is on BLX, so we could be jumping around there. I mean, it's got 2 minutes to get up. So I don't think we're going to hit that point, guys, but we are touching one here. No, we may find another one when we're setting these up to see what we're going to do, where we're going to do it. I personally think we're going to hit this trend line that I'm going to show you guys right now, again, in my opinion. So from a trend line, like I was saying earlier, which I think that if we do a bottom trend line, that we should make the color some shade of red. No, actually, should make it green. Green support and red is resistance. But like a different color green and different color red than this. So I like bright colors, and trends are my favorite. So I make those big, loud, in my face every single time, which you can set trends on the monthly and the weekly. You can do it on the yearly too. I would just say that the weekly and the daily are the easiest too, because you can see the multiple touches on them. For instance, if we brought this to a 1 month chart, it makes it a little bit harder to see because it looks like it's going past it. And 12-month chart just looks silly. You know, you're obviously not going to be able to make too many great trend lines when you do that. So setting a trend line, same thing. You're just going to come over here to your tools, click on it, grab your trend line or Alt-T, click on a point down here, and I'm going to find for you guys, there's like little magnet tools that, so if you click on magnet mode, it snaps your drawing place near to the price bars it's closest to. So you just hit control on that and it, see how it just snaps on it? So it will get you an automatic price as soon as you click on it, right? So we want it to go right there, and it's all the way on your prices. And this is what made me confident that we hit the bottom. I think we have enough on setting the trend lines and the support and resistances. So I'm going to.
So when you're drawing your trend lines, are you just looking at the bodies, or are you looking at the wicks as well as touch points?
So again, the bodies are more important than the wicks, but you also want to draw on the wicks as well. So a good idea to do this would be, let's go back here and actually find a good trend to draw some lines on for you. All right. So this is on the daily. We're going to get the best on here. The most touch points and the wicks and stuff. So I draw them from the wicks usually first, just because I see better information from that, in my opinion, but the bodies are the most important when you're doing this. And I mean, this could be looked at as a fake out, and then obviously a drop down, a black swan event that made that go down. This is COVID, guys. This is where stop losses are stupid important, actually, and you know what we have going on right now. But if you draw it from that point and you draw it from the top of the wicks as well, you're going to have maybe 3 touch points on this one. And that's pretty close. So when this is actually probably a blow off top that we have here. So sometimes you want to grab the second wick if you're drawing a wick. That's an important thing too. And it will spike up a lot on it. So the biggest thing that you want to do when you're drawing a trend line, and especially when you're starting from a wick, because it will touch, if you're drawing it from a wick, you're going to touch bodies and you're going to touch wicks at the same time. It happens very often. This is just a point of interest, right? So we're going to be looking at, you know, situations where like this one would start right here. When you have a pullback on something and it goes up like it did on this candle right here, this is also a support line that you could be drawing here, because the price action came up, it came back down, and it tested this. Sometimes I draw them back like this, which is what I'm going to get into with you guys here in a moment when we actually start talking about what's going on right now. But when you're drawing a trend, it can be from both. I would say to start finding a trend by starting from a body, draw a couple lines. And when you start coming to a point where it starts making sense, you're getting a lot more touches, because this price action is not going to be here when you start doing this, right? We're predicting the future. We're not predicting the past. And that's what trend lines will help you do, is points of interest where the money may come and go and sell and buy, right? So this often I will see that the price action, if you start it from here, so once a trend gets broken, and this, you'll learn this a lot when you're doing pattern trading as well. When there's a breakout, there's a retest, and then it goes. That happens on trend lines too. You might not see a pattern that you notice at all, but the trend line will get retested. And as you can see, it came up to this point, right? So if we had this right here drawn already, and we just threw that all the way over, we could make trades off this 1, 2, 3, maybe 4, you know, if you catch the downward one. But this is why it's bad to trade on smaller time. You know, if I jump down to the 15-minute, we're going to have closed candles under this, I can almost assure you, which apparently I can't do. Oh, this is on BLX, so there you can't go down to smaller time frames on BLX. Nice cursive. So when you're drawing a trend line, you have to find it. You have to find the trend line, and you're going to draw it in a few different places just to give yourself an idea of where it could potentially go. And you don't want to make your chart too messy when you're doing so, but you know, start from the daily and the week, or the monthly. Most likely the weekly, you're going to find more trend lines than you are on the monthly, but I would say that you could still find them on there, but you're definitely going to find better stuff on the weekly and the daily. That's the main things I go on, and the 4 hour. So weekly, daily, and 4 hour I go on. And then if I'm trading intraday, I step down to the hourly, and sometimes we'll even do them on the 15-minute. But as you know, I mean, even you, Andrew, like the couple trades that I've sent you that were on the 15-minute, like they don't play out. So it's a lot better when you can kind of find confluence between, you know, hopefully perfect trade. You're going to find confluence between the weekly, the daily, and, you know, maybe the 4 hour or something along those lines that you can have, and then you can play off of that on a hourly 2 hour 15-minute chart. But my favorite chart to use is the 2 hour intradaily and the 15-minute chart. Jake uses the hourly a lot, but look at all of them. You know, while you guys are learning, start looking at all of these charts, which you're gonna have conflicting information a lot. A good thing for you to do, and I mentioned this before, is to get a piece of paper and start tallying up, you know, where I have a bullish case and a bearish case. Start writing down the price points of where it's at so you can visually see it. And the more you write that stuff down, the more you're going to get used to these charts. You're going to start understanding, like, okay, this is in your head. You already have these price points. You wrote them down, you found them. You know, I have a trend here. So you put maybe like bearish and bullish, and then, you know, on the top of the chart, and then you know, put the 15 or the start from the weekly, and then go down to the daily, whichever chart you guys are going to use. And it all depends on how much you're going to be paying attention to this too, because if you're not going to be paying attention to it that much, then the higher time frames are what you're going to want to look at, because, you know, you go on a 4 hour, you only have to look at it every 4 hours and see what it's doing, if something changed, if you were right. When you're, you know, double checking those things, you can have alarm set on there, hey, 4 hours has just passed, and that will bring you in where you can make this as stress-free as possible. Because I trade very stressfully, but at the end of the day, when I don't trade stressfully, when I just relax, like, I mean, right now I pretty much have my trades in for the rest of, you know, this bull run, hopefully. And you know, hopefully that's the case, and I don't have to look at this anymore. And I would like to make this as stress-free as possible for you guys, especially just starting out. The main thing that we want to do is make this an easy thing. You know, everybody's getting into crypto. It's going to happen. I can't see it going away or going to zero or anything like that. But if we can teach you guys those points where you can just wake up in the morning, you know, look at your chart for 30 minutes or something, get a few things set up, see where the price action's going for the day, maybe set your trades up where, you know, we're making a limit order down here or something, and then it drops down there and it picks up, and you know, by the end of the day, you have money. I mean, that's day trading if you sell it that day too. So, you know, you're to a point where it just gets easy. And to that point, I will mention this. I've traded pretty crazy for a while and kind of like dumbed it down a little bit, but I keep like a separate account, which I call a casino account. So if you're that type of person that you have that like little gamble that you need to make sure that you scratch the itch on, I would highly suggest that you put a side account and just play around with it like that. I'm not suggesting you to do it, but I'm saying if you're going to do it, to make sure that you have that on the side and it's not your big bag, because the only way you're going to do big gains on this is having the most amount of capital, and maybe you can scratch your itch on the other one. And I suggest everybody to stay in spot trades, like have all of your money in spot trades, be holding if possible. Like, you guys are not traders yet at all by any means, and I don't want you guys losing money along the way. Of course, I don't own your money and I'm not your financial advisor, so do as you please. But in my opinion, you guys should be staying far away from doing crazy trades, selling when it drops. You know, if we have this huge drop right here, and, you know, asking that question, where is everybody at on their finances and all this stuff, and talking to everyone, it's like, to me, we have to have a pullback. We have to have something come back up. And you know, the more I look at this, the more I think that we're probably going to stay in this channel. So everybody's going to have a spot that they could average down a little bit once you get back into profits. When we're talking about this, is we're 4 days into bouncing back up above this trend right here. And that's 3, 4, 5, 6, 7 touch points on the daily. We don't have anything on the top yet, but I would highly assume that we jump back up to this price point. That's my best guess right now. I mean, this is short term that we're talking on here. I have a really bearish case that I'm about to show you guys. Justin can attest to this. I like almost lost my marbles at lunch today. But so just because I'm seeing something on here, this is confluence right here. We have a trend line that we need to get over. This is the weekly. We have a trend line, or this is a resistance technically because it's underneath it, but we want it to be support, which it could, you know, find this as support at the end of the month, right? We could, you know, because we based it off of multiple weeks when we set this up back here. And this is the time when I would come in here and, oh, you know what? BLX doesn't, I don't know when BLX closes. When is it? There should be another week on here that's just started. Well, I'll probably have to show you guys actual BTC here in a minute. But this being confluence from these 2 weeks right here and another week right here, it came down. So we have the bodies on this one. These aren't really touch points, but it still didn't pass it. So that kind of confirms that this is support or resistance. It wicked up past it. Okay, there we go. And then it broke through it. It came back down and it retested it. That is the best support and resistance that you can set, is when you see something come through whatever you put there, and then it comes back down and retests it at least once. I mean, on the weekly, maybe we have a couple days on there when you break it down, but this is now considered resistance right here. So that's what we really wanted to see the close on this from, is get back over that line, which we may be on that on BTC. So I will check that in just a moment. But just to go over the bullish and bearish case scenario really quick, just to give you guys an idea of what you guys should be doing in the next few days, or where you should be at, or what you really want to do based on these thoughts, which Jake actually had the bullish case. So hopefully, oh, great. I want to do this all the time. So let's go over this. What do you guys want to see first? You want to see the bearish or the bullish? Bad news or good news? Talk to me here.
Bad news.
Bad news first.
Bad news. Bad news first, huh? I never hear that. Right? And
And that way we have
bad
something to look
news
forward
first.
to.
Fair enough. All right. So let me, well, I have to do it on BLX. Great. Okay, cool. Well, starting over. That'll happen, guys. This gets irritating as hell after a while, after you start going through things. All right. This is a scary chart, guys. Heather, are you still in here?
Yeah.
You sure you want to see this?
Show it to
It's
me.
bad. It's bad. It's bad. So I was just messing around, and this is, you know, we're basically all theorists, right? Like we're just coming up with possibilities that could be happening. But if something consistently happens, and especially when we're looking at BLX, this is a big indicator right here that if it happened previously, most likely it could happen again. You just want to watch for those things. So we were all sitting at lunch earlier, and as you saw before, I posted, I think it was on the weekly that I did it. Let's just go to the weekly. So I started going through and I noticed, I'm like, okay, well, we have, come on, snap to it. There it is. So we have these points. This is, you know, basically the bull run. This is where it should have started. We had a huge wick down, and you know, once that wick hits and then you get another one, and this is what I think is going to happen. I'm just going to tell you this right now because that's the bullish case and you guys don't want to hear that yet. All right, so I went through the chart. I started drawing these trend lines on here, and I'm like, you know, this is probably what's going to happen here. So we did wick down below this a few times. It's possible we could again. I actually said before that I was going to sell at if it broke down below this trend line, but this changed my mind, right? We could wick down past it. Hopefully it doesn't go retesting. I don't know why that popped up right there. Hopefully it doesn't go retesting a point like it did here. So what I mean by that is when we wick down, we retested the top of this. And if that were the case, then I would guess that's where we would go. There's actually confluence right here, and which was expected that when we broke through the previous all-time high, we were going to jump around a little bit. So if we do break through this, you guys might get a sale for all the way down to 20 grand, which for everybody that has all of their money in right now, it's going to be a rough ride. For everybody who got into this and said, man, I wish I could have bought Bitcoin when it broke its all-time high again, you may have another chance to do that. I don't think it's going to go down that far, but if it did, that's a good price point that we could look at to it coming down to. I really don't think it's going to go down that far. I also have, when a pattern breaks out, it comes back and retests it. And I was just messing around with this just to see, you know, okay, we did come down and retest it, right? So this was an asymmetrical triangle that went on for years. And as you can see, when we had those wicks back here, black swan event, we broke down beneath it. This is why bodies matter more, because, you know, if you put the bodies on there and you have a, you know, 2-year some trend line, this is June of 2017 all the way until April of 2020, or March and April of 2020. So basically 2 years and some change, maybe less. Okay, I don't know, I'm not doing math on it right now, but yeah, so your breakouts of these trend lines were black swan events, which if you notice news happening and you're breaking a trend line, not always, but most of the time, it's either buying time or selling time, depending on which way it goes. And I could show you a similar thing. Heather and I were talking about the SNL thing before, and it just didn't look good. And that's kind of how, you know, I was short on it when everybody wanted to see Dogecoin go to $1. So again, the more of these that you guys can find, where did I draw this one from? Right here. I don't think that's where it is. The more of these things that you guys can find, that, you know, you can find at every bull run. If something does something, then most likely you're going to see it happen again. Most likely. I mean, at least gives you a good, you know, a good understanding of what could be going on. But I'll tell you this too. This is the point when you really need to let your emotions go, because if you're super bullish on something, you're going to be finding things that you shouldn't find, right? I think I have my emotions gone on this one. That even goes back further. Come on. I hate this damn snap thing. You guys can use it though. It'll be helpful when you first do it, but I like my charts to be pretty close. And you know, zoom in to make sure you got 3 touch points on there. 1, 2, 3, 4, 5. And you can see it wick down past it. So I made this earlier and I was, you know, just kind of checking it. We have the 3 bull runs on there. We rode up that point. The more I look at this, I feel like we're not looking at a similar bull run as to what we did last time. The time before, I really hope it's not this. That we jumped up a lot. I know a lot of people FOMO'd into it. I've been watching that Wyckoff distribution a lot. Jake absolutely doesn't think that it can happen in crypto. I personally do. I think it's going to play out. I think we have another drop potentially below this next week. I think that scares a lot of people out. I think that maybe the next week or week and a half, don't quote me on this, guys. This is just an assumption at this point. We're going to have to see how these things play out. I mean, we just closed a long wick, but there's a lot of FUD going around. Fear, uncertainty, and doubt. You know, you got the China stuff going on, which they do all the time, which Heather does a great job of reminding people that, you know, this is a lot of stuff to try and take as much people's money as possible. And you will start loving how great the news is at manipulating people after you start trading. You start watching this stuff and it's like, is anything meant to give us information at all? Or is it just meant to completely fool us on, you know, what we should be investing in or not investing in? So I'm going to show you guys the chart that I saw that scared me on this. But the bullish case is pretty much what I'm painting out for you right now. I mean, these trend lines right here, we rode up it and then we took off, you know, and we have not seen a parabolic jump yet. We're moving, quote unquote, parabolically, but the real moonshot every single time, we've not lifted off yet. And I think that has a lot to do with manipulation, but I'm going to get back into that to explain the bullish case a little bit more here in just a second, after I show you the oh shit chart. So we got 10 years of price action right here, right? Let's make these red. Murder red. All right. So again, just messing around with the charts. Yeah, that's what I want. So I started drawing these lines, and on smaller time frames, I do this often. I will draw the lines, you know, a few touch points. I try and find which have price action on the bottom and the top. Maybe this wasn't a good idea to do this. The snap. Yeah, it's bad. I think I drew it from here. So back here we had, like, this is crazy price action that's happening. So sometimes you don't want to draw the trend line from like a ridiculous wick or something because it's just price manipulation or a black swan event or something like that, which is why most likely that the body is the better scenario for you. But I really think that it's this wick right here, this first one. Damn it, I did it again. I think we start from this wick right here. At least that's what I did. And you can start drawing some price points on. Well, let me just draw the bottom ones first. So start from the bottom price of everything, of every run. Okay. And there's your scary point right there, is that if you start this from the bottom of every run and bring it up to the beginning of every run, the breakthrough point of when it started going parabolic, and you start it from the beginning, if you stretch the line out, the line rides the trend up, and when it breaks down through, it's the end of the bear run. Boom. So this is when it started. Price action ran up, it came back down, came up, came back down, broke through this, comes back up, retests it right there, comes back down, comes back up, retests it, comes back down, comes back up. That's the top of the bull run right there. So then you do it again. You start it from when the bull run started. So it comes from this point all the way up here. It rides it up, comes back down. And then this is basically the end of the bull market, or the end of the bull market. This, I mean, it's technically bearish from here, but that's the end. It comes all the way down. It comes up, retests it, comes up, comes down, and then we ride it back up again. And then boom, hit the high, which is exactly where that's at. And then you come back down, we break through it. And personally, looking at this chart, this makes me think that this right here was truly the end of the bull run. And this right here was the beginning of it. Then we had a black swan event. Thanks, brother. Will you throw him outside or something? Whatever you gotta do with him, he's loud. So this being said, this is scary to think that this could be over now, and it very well could be. There's some economists that I was watching last year, and they were calling 70 grand. So it could be. The good thing is that we can make money on the way down. The other good thing is that I have not seen anybody talk about this yet at all. Heather, have you? Saw anybody bring this up?
Nope.
I mean, what are your thoughts on that?
Well, I don't know. I don't think it's over. I just don't. The time frame doesn't add up. I mean,
It
this,
doesn't. None
you
of
know,
it
it
does.
doesn't. It wouldn't make sense. It would be a whole completely different thing, and we'd have to rethink everything.
I agree. That is my bullish case, honestly. I completely agree with it. I think that personally, I don't think we're done. I don't think we're done. We're just going to keep going down, period. We have at least a dead cat bounce coming. I think that these lines are important though. And I think that this is going to tell us two things. If we're not done, we know where this is going to go the whole entire time. So we can have some massive, and I'm like getting goosebumps thinking about this, because it's literally, I mean, we're calling this out for forever. I mean, this is essentially what Bitcoin always does, right? So we will know literally the best buy and sell points that we can possibly get. And shit, I probably tell you where Bitcoin's going to end up. If I'm going to dive into this chart a little bit more, and please do me a favor, do not share this with anybody at all. This is specifically for you guys. You guys start passing this around, this could get to people that could start manipulating the hell out of it eventually. So hopefully nobody brings this up. Hopefully nobody sees it. And hopefully I'm right and we do that. I mean, it looks pretty legit to me that we're going to be doing exactly this, you know, every single time. But if that's the case, then I think that this black swan event that we had here is not part of the price action. Just as, you know, there's a couple dips below these lines, a couple heights above them. This is FOMO, you know, things that are emotional based should not be on your chart at all. It doesn't make sense. So if that's the case, I mean, I don't think that should be there. And maybe that first line that I drew is not right, but I'm going to keep it there. I mean, the line, if you cut out the black swan event, looks a lot more realistic compared to all these other ones. You know, it's a parabolic movement, and maybe I should talk to a math teacher about this and see how it moves. But I don't think that we're done right now. Like, we have more movement that we're probably going to bounce up off from.
Those because I'm taking a lot of calculus courses right now, and in a parabola we study a lot of what's called derivatives.
Yeah.
And all those lines, derivatives are mathematical equations to find tangential lines on curves in a graph.
Yeah.
And that's exactly mimicking. So like if you're finding tangent along a curve.
Yeah, you can scale this a different way. There's a lot of people who make logarithmic parabolic movements on this. They take where is it? Right here. So you'll see if you look up the just Google logarithmic chart on BTC, full logarithmic chart on BTC, and you'll see people will make a chart like this. Hold on, let me get rid of these red lines. So it's a similar perspective of where the price action's going, what's going on. Again, I don't think that this is part of the price action here. I think we're going to be in this bull run for a long time. The more I start studying this and the more I'm staring at it, I think that we're going to be cruising sideways for a bit. I really hope that we don't come back down and test this, but it's possible that we do. I think that mainly myself and everybody in this class needs to consider that. I think there's a lot of people who are probably going to start rushing to crypto at better prices. Like if we trade sideways for a little bit, we're going to see another, like at least a dead cat bounce. A dead cat bounce is basically what happened right here, right? We had a spike down, bunch of people bought, came back up, you know, boom, we're good, which we have right here. I mean, if we compare the price action to this, like how much this first drop came down on Bitcoin, and the main, as simply put as I can make it, the bullish case on this is we don't have a blow off top. We just don't have any spikes at all, any of it. And if you study the Wyckoff, that you look up the video and you start looking at these things, I'll actually make a Wyckoff chart for you guys, and damn it. I will make a Wyckoff chart for you guys, and or maybe I'll just there's a guy who made a really good one. I'll just share you guys that because it is a lot of tedious stuff, and he has a very good explanation of it. It's, you know, the price manipulation. I personally think that it happened. Bottom line, Jake doesn't. That's good. You guys can listen to his opinion on it too. I don't know Heather for sure her opinion on it, but I definitely think that it's a very, I mean, we have like 2 or 3 more things that need to happen to confirm the whole situation going down. And one of them is a lower low. So, you know, that's to take in, you know, to consideration when you guys are sitting there with your bags. And you know, we may have a bigger discount. Again, crypto's not going to go away. I am strong about that. Not financial advice, but I have a lot of money that I am going to let ride in this scenario. The more I think about it, I might just get my liquidation point down to 0 and take some losses when we pull this back up, just so I can still play the game with everybody. And, you know, it's a risk management thing. Like at the end of the day, I could have, you know, just held off. I was out. I was in USDT and ADA at one point, and I just started getting bullish, man. Just got in my emotions and started thinking about these things and looking at stuff, and I'm like, the boom's in. I'm like, great, what a discount. You know, like I started, when you start doing futures, you'll start typing in take profit numbers, and then it tells you how much money you can make. Don't do that. It's really bad. You should type in, you know, your stop losses first and look at how much money you can lose, and maybe not even put your take profit. There's 2 spots where you can put take profits on when you're doing both margin futures and spot trades. You can put it on there, and it's I don't think it helps anybody get out of their emotions when trading if you see what the profit is, because you think it's yours already. It's this mental thing that happens that you really think that it's yours. But let me draw the rest of this chart for you so you can see, and this isn't going to be perfect, but I'll try and make it as perfect as possible. So, I mean, that's the gist of it, the logarithmic chart. I'm sure this is off a little bit too, but when you draw this, I mean, it's becomes very clear that we have a higher high coming in, you know, period. There's even my crappy chart that I drew, you know, we're getting to a point where an understanding of this is, and then if you want to get into some more technical things, you can take so there's a date and a price range chart or tool on here that you guys can zoom in on this stuff. And this is what I did when I really got in investing, started putting some pretty serious money into this stuff, that, I mean, all of my money into it. I went and studied BLX. BLX is the #1 chart that you guys can come learn on, because there's so much information on here. You can start making your own ideas of where things are going, studying the previous bull runs that have occurred in the past, because the more data that you have, law of large numbers, we are going to end up with a better idea of where we are going to be at the end of the day. And it's a really good thing to do that on BLX. But, you know, I'm just going to take this away and show you what I'm talking about here. So if you take the date and the price range from each top to each top, it's pretty close. Snap tool works for a lot of stuff. So, all right, once you get the first 2 on there, you can start seeing that the date, like the amount of days, 903 days, 1477 days, it starts getting bigger. So what I did was I divided this number by this number, got the percentage difference between them, and then times that by how many days difference it was and then added that to this to figure out where it was. And I don't know why, but I had like June 5th or June 19th or something that the amount was. I'll remember it. Let me write down a note. I need to make a, so I didn't see anybody else online that came up with the same date as me, which actually made me think I was wrong. However, I had like June 19th. Heather, if you look back at the BLX charts that I sent you, there's a yellow line that's up and down. I've obviously taken it off since, but I had June 19th as the end of this bull run. I could be wrong. I never looked back to see if I was right. Like when I did my math, I was just messing around with it, but that's what I had. So let's see, actually, how many days? Yeah, it just doesn't make sense. Maybe it got moved over when I was messing around with my charts. Like I said, you got to lock stuff in, but if you do the percentages from this to this and add it to this bull run should last longer than this. And even if you understand economics very well, once you fully grasp it and you know that more money coming into the market moves the market slowly. It's not, I mean, obviously we just had a huge drop, and that was due to, if you go based off the Wyckoff distribution, that was absolutely due to the fact that there, has new money has came into the market, and at the end of the day, you are getting manipulated. So it can move the market very fast, but the advancement that we are having on this is absolutely going to be slower as time moves on. Less money in the market, it can be manipulated very easily and jump around, bigger movements and things like that. So when you look the logarithmic chart on BLX from the beginning of time,
It should be around 2,415 days.
Yeah, that's what I just got too.
okay, yeah, so let's you said 2,415.
Yes,
Do the math on
it was a 63% increase on the last one. So 63% increase from 1477 is that.
I'm gonna make this chart public and do that. And it's the longer you go, you know what I mean, in an advancement, which this doesn't necessarily mean it's gonna play out. Like what's going on in the world has something to do with it. I mean, Bitcoin is, if it gains mass adoption, this stuff doesn't matter. Like none of this is going to matter whatsoever. And the use case for Bitcoin right now, personally, which is my favorite bullish sign, that Bitcoin just showed up to its job. You know what I mean? It just did, period. So this is 694. Did anybody else do that math? Did I do it right? 694.33.
What is that? How many days we have left?
No, this is the
What are you-
percentage that we went up. So from here to here, that was 3,590.
Yeah,
And
that's
from
that's
here to here, which, this time's just different. This could all be bullshit, but it's what we're doing to gain knowledge along the way to be able to get a just idea of this. But what you don't want it to do is play on your trading too much when it's a theory, right? You can post this online and maybe be a genius one day. Everybody starts asking you for financial advice when you're right, So I think the two theories that are good that we have is that last chart that I made with the lines in it. I'll try and make like a really pretty chart that I can share with you guys. Just let me post it first. Let me make it public so people can know that it's actually my chart. All right, we'll just call it that for now. It's not right. And then it was 2,400 and how many days?
15.
15. Okay. Oh, it's down here. Dirt. So you said it was 63%, right?
It's like a 69% increase, I think.
Percentage, I believe it's the difference divided by the original number. That's your percent change.
Yeah, that's close enough. But I mean, if you look at this, I mean, that only brings us up to, you know, if this is right, that brings us up to 148. I mean, it's a little bit more than that.
So you're measuring the increase of the all-time highs as well between the runs?
Yeah, the dates and the all-time highs. Were we at 698? Was it percentage increase? And we're close to it at this point. So we're hitting 150,000. So 150,000 from the previous high at 19,000. We're at 5, 6.5. Wait, 5, 6, 7.5, 7.5x. So from the previous high on this one, we went up. It was basically 1,100 to 20,000. So that is like 18x. So it cut down. I wonder if that percentage is the same. I'm gonna do the math on this and put some of these things together just to give you guys a perspective.
I'm curious
Huh?
real quick, if you take a parabola across the top of the
Yeah.
all-time highs to see where
If
that
it
matches
touches
up.
here.
Well, I mean, obviously it'll
Oh, you
touch
mean right now?
just to touch
Just
all
do
of
it
them to
now.
see if it ends at that top corner
That's
or how
what
close.
I'm gonna do. I'm gonna make a chart just like this. I'll make a chart with both of these on it, and I'll make it nice and colorful for you guys, so you guys can get an idea of where that's at. I mean, I think that's pretty legit, actually.
Yeah, that's what, when I was just eyeballing it, it seemed like it would fall pretty close.
I mean, so essentially the lines that I drew is this. It's just a different way to look at it. Like, it's the lines that I drew, mathematically, it does the same thing as this does. It's just a different way to draw it. So I don't know how to explain that in any better way than doing that. But again, in my opinion, I think we have a bounce from here. I would definitely take this line into consideration. Not that one. I would definitely take this into consideration here. I think maybe we come back down and start tapping on it. I mean, we haven't hit that, but this line's probably not perfect. I'm gonna figure out how to do it in like a mathematical sense and put it on there so it just happens instead of this snappy stuff that's going on. And I just don't want to have to go through all that on the video. So let me actually, we'll keep this on here. But yeah, for the most part, this line's important. These things are important. I think that it's really important that we actually went over this in this call just to give you guys a perspective. But I'm going to look into this a little bit more and make a more perfect chart this week for you guys. And then I think that, you know, within the next couple of days, we'll start looking over what's happening with the price action now. As soon as I get off the call, that's what I planned on doing, is going over this just to see where that's at. And I got to find out when BLX ends. I thought it ended on, so it ends in 3 hours. Okay, so midnight. All right, I guess BLX ends at midnight. The weekly does. So, but on BTC, it doesn't. I didn't know that actually. BTC. Actually, I don't want to change this. I want to save this. So this is another thing too, is if I just switch to this other chart, then it's not going to. I just upgraded this. So I don't do this that often, but you want to make sure that you just make your charts so you can have them on there. I mean, you can make 2 BLX charts too if I wanted to. We will go to, just because I'm checking all these charts for everybody, they just started getting messed up. USDT. It said simple, simple BTC chart. Oh, that's great. All right, before we get off this call, I want to make sure that you guys do know that I want you guys to set up a few things on here. Don't make your chart look like this. It just has all this stuff on here because it's just stuff I test out. Probably bad to do that, but well, that's actually where I had Bitcoin going up to. I made this chart a long time ago. Why did I have it going there though? My alarm didn't go off and warn me. Oh, damn, that was a pretty good call. Wow. I did not get a text message from them. Maybe I didn't have the Pro Plus plan or something. Make sure you got your plan set right. All right, so this is obviously printing a new week right now. And let's do this, Heather. Let's look. And were you watching it to see what happened when the new week started? What color was it?
Green.
What?
Green. Wasn't it?
It was the first second of the new week was green.
Yeah, I was watching. I mean, I'm pretty sure it was the first second. It was at least the first minute. Let me look.
Well,
Let's see.
I can look back at it, but the other thing I want you guys to do, and this is, I believe, a regular chart. So put it on logarithmic. First thing I want you guys to do on here is go to your indicators, which we're going to go over the indicators more in full next week. I want you guys to have a MACD, moving average convergence divergence. I want you guys to come on over to here and make sure it's just the built-in ones. You don't want to get any of these down here. These are codes that people put together on all of this stuff. Click on over here, do some reading on this. I'm going to have this printed out. I'll go over it briefly next time. So I want you guys to actually read over the moving average convergence divergence, go through all of this stuff, and I will start explaining, once you know the gist of it, the math behind it, you know, the things that you can change on it, the histogram, the signal line, the precision of it, you know, all of that stuff. It actually teaches you what I'm going to teach you on this, but I want to show you a couple tricks and things about it. It will tell you different ways to use it, you know, bearish signal crossover, bullish signal on that, but this will tell you how to use it, but there's tricks to using it as well. So that's what we're going to go over. So the moving average convergence divergence, add that to your favorites. Boom, put it on your favorites, and then add it to your chart and it will show up. And then the next one I want you guys to do is your RSI, relative strength index. Same deal. Come over to here, put that on there. That's what I like to use. There's tons of other things that we're going to show you guys along the way. And realistically, that's going to be up to you guys to find out what works best for you. The main thing that you don't want to do is have these indicators that are doing the same damn thing, 2 of them. You don't, because they're going to be telling you the same thing. They're going to be looking different, but they will be telling you the same exact thing. I always change my colors on my RSI here, which is, it was green.
Yeah.
Cool. All right, well, that's not a for sure thing, guys, but when I see a new candle form, and I think I said this in the last class, when 8 o'clock hits on Sunday, I am watching the first second of the color of that candle. Generally, by the end of that time period, that weekly candle that just printed right here, generally what happens is when this weekly candle prints, if it prints green, most likely will end up green by the end of the week. That doesn't mean that this candle is not going to get crazy on us and go down, scare the hell out of everybody or whatever. But most likely, most of the time, and this isn't something that I've looked into, it's just something that I've paid attention to. When you stare at these charts and you're married to them, you know what your wife likes to eat for dinner type deal. So at the end of the day, you will notice certain little things. You guys will probably tell me stuff along the way that you noticed, and we'll start paying attention to it too. But yeah, hopefully that's the case. We're going up right now. Over the next few days, I wanted to talk to you guys and see if you know, I can give you guys an opinion on what I'd do if you guys want to ask me some questions about things. But again, it's just an opinion, so don't take my my opinion as gospel. You know, this is solely just to give you guys an understanding of what a trader who's been trading for a while would do in your scenario, or, you know, and teach you guys these charts a little bit better, a lot of bit better. So give me just a second. Let me make sure we got both these. So the RSI, the MACD, MACD, and there's two different other ones that you want to have. There's the SMA and the EMA, which, so you guys don't have a bunch of them on here. And I'll send you guys a link to this too in the chat. I'll find the best one. So there's 20, maybe you should have the 20, 50, 200, and the 100. It's like nobody coded this. I might just code this. It's not hard. Moving averages aren't hard to code. So maybe I'll just make one and make it public because no other bum on here has really made this. There it is. Okay. So VETA, whoever this is, say thanks, comment on it, because you can go to it and comment. I get sketched out by these sometimes though, because I've seen some that don't make all that much sense. Wait, does this have a SAR on it too? Some open script. Put 10 moving average, that's that. The close is on there. I think it does have a SAR on it too. No, it's a moving average. No, it looks just like. Yeah, this, okay. This does not have the SAR, which is good. So, yep, toss that on there. I guess I could have just turned it on to see if it was happening. But you want to have your simple moving averages. How is that the 10, the 50, and the 100 if it's not on there? Where's the other one? All the 200's not showing up because the chart's not old enough. All right. So you'll only be able to use this on BLX. That's crazy to me. But anyways, put the SMA on there. It's a simple moving average. And you want to also put the EMA on there. And it's only because we're going to kind of go over the difference between them, what you should have on there, and why they're important, what time frames they're important on. And I think I said this the last class, is the EMA is more accurate, but the SMA is more important. But they're both very important lines that you can see on here. If you see the EMA is that orange line. All the skinny lines is the EMA on there. and we're staying above this right now. So I'm going to pray for a green Monday that we should have here. There's a couple sketchy things happening with some of these moving averages too, which we'll get into next week, but they are not necessarily printed in stone yet. But we will go over these things. So your homework is to look up the SMA, the EMA, the MACD, and the RSI. Quick reads. If you don't understand it, you guys can ask me questions about it, but we will be having a full class on it next week. We're going to try and, fingers crossed, have as many modules as possible done. We're going to be working a lot to try and do this.